Okay, so we're going to go over the problem in the first homework assignment. And the first part is asking us to journalize the January transactions. So that's this middle section here. So for January 1st, we debit cash for the notes payable note of $18,000 and then credit notes payable for $18,000. Now the January 5th, there was merchandise sold. It was sold for a total of $6,466, which includes the sales tax. And so we have to first debit the cash, which was that total, $6,466, and then to figure out the difference between the sales revenue and the sales tax payable, it is $6,466 divided by 1.06, because the sales tax was 6%. So there for the sales revenue, we credit $6,100, and then the 66 minus 6,100, or minus the sales revenue, gives us the sales tax payable of $366. So the next entry is that they perform services for what was already paid in advance. So that ends up, first we give the date of January 12th, and then we have the unearned service revenue, which reduces the unearned service revenue that we had in the beginning. But the amount was $13,800, which we debit unearned service revenue, and when we credit the service revenue for the same amount. And January 14th, paid the State Treasurer's Department for sales taxes collected in December of $7,750. So again, enter the date and the sales tax. This is where they're just collecting it for the government, and debit $7,750 and then credit cash for $7,750. And then the last journal entry, they sold 730 units of a new product where it was $45 per unit plus the sales tax. So that ends up being where the unit 730 times the price of $45 comes out to $32,850. Then we figure out the sales tax by multiplying the amount of sales revenue times 6%, come up with 1,971, and we add those both together to get the accounts receivable amount of 34,821. And here the credited amounts is the sales revenue and the sales tax payable that we calculated earlier. And now for the second part, we end up journalizing the adjusting entries. They all have the January 31st date. So the first one, we're going to, the account titles are going to be interest expense and interest payable. And how we determine the interest expense is we're going to take the amount of the notes payable, which was the $18,000, and sorry about going up and down a lot there. The percentage is 5%. So then it's only going to be for 1 month. So that will be 18,000 times the interest rate of 0.05 times 1/12. And that amount ends up being $75. So it's debited to interest expense and for the same amount credited on interest payable. And so the salaries and wages expense, we start getting that from this paragraph here, the amounts. And so they had the earned wages of 78,300. And then the withholdings. And so we debit the salaries and wages expense, 78,300, and then start to list all of the withholdings, and they're listed here. And then after we list those three, we subtract the sum amount from the salaries and wages expense to come out with the salaries and wages payable, which is here at $65,039. And then the payroll tax expense, we noticed that that comes from the FICA taxes payable. And so to record that, the employer's payroll taxes, we end up debiting payroll tax expense for the $5,990 and do the same amount we credit the same amount for the FICA taxes payable. And then the last part of this problem, we end up doing a balance sheet, partial one, for January 31st, 2017, where we list the current liabilities. And typically they do start with notes payable and then the accounts payable. We get that information. First, the notes payable, the $18,000. The accounts payable didn't change, so that was the $44,800. Salaries and wages payable, we just figured out from the amount that was in section B there. And then the FICA taxes, got to remember that the FICA tax, there's an employee portion and then there's the company portion, and it's the same, so that's why it's 5,990 times 2 to come up with that 11,980. Now for the unearned service revenue, we start back up with the amount that we had in the beginning of the year, which is this 21,300, and we subtract what we reduced it, which we had that on January 12th, where there was 13,800 where the services were performed, and that's where we get the amount of $7,500. And then the federal income tax payable, we had that from the earlier amount. Then the sales taxes payable. This one, you start out with the beginning, which was the 7,750. And then we look from the transactions that we had another sales tax payable, an additional $366. Then here, where we had the 7,750 debited, that is subtracted from the amount. And then the last one is the sales taxes payable, 1971. So when you have 7,750 plus 366 minus the 7,750 plus the 1,971, come up with the amount of $2,000 $337. And then we get the state income tax payable from the amount above, and then the interest payable we had calculated earlier in this journalized adjusted entry. And so then the total amount of all those ends up being $157,002. Thank you for watching. If you have any questions, please post them in the discussion board. And I hope everyone has a great week.